What is up, guys? My name is Bryce Pruitt, this is the M1 Journey, and welcome to the channel. And welcome back to episode 5 now of the M1 Journey. Unfortunately, this past week wasn't a very good one on the market. All of the major indices were down over the last 7 days. My portfolio didn't perform nearly as well as I would have hoped for, especially after the kind of like 3-week run we were on, especially where we were seeing consistent gains. But you got to take the losses with the gains. So I'm sure we're right around the corner of some more green days ahead, but kind of with it being a downturn a little bit, kind of gave a little bit of a buying opportunity in some areas that I kind of took advantage of. And this week was kind of a retooling a bit for my portfolio overall. I made actually my first sell on M1 since I've been on M1 at least. I also bought a few new positions, and I'll talk about that more later. But as far as what's new with the channel, still same old. Follow the Instagram and Twitter pages at bpruitt_YT. As always, I appreciate it if you do that, and helps you stay up to date with me. And really, that's about all I have for news. We'll get into the disclaimer, and then we'll take a look at the portfolio. So I always make a point of it before I start getting into my portfolio to kind of put it out there that I'm not a financial advisor. I don't pretend to be one. I'm still learning myself because I still got a lot to learn. Yeah, just do your own research, make your own decisions about what you want to do or don't do with your money. I'm just doing this for really as a hobby, just to kind of try it out, see what happens. But yeah, I guess we'll go ahead and get into it. All right, so as I kind of hinted at previously, was not a very good week overall. My long-term portfolio lost 2.51%, and my Roth IRA lost 32.29, so I was 2.36%. But overall, still up a little bit on this position. Got some market gains plus the dividends kind of making up the majority of that. But over here, I'm still up over 8% all time since I've been on M1 back in July 2nd. So yeah, not a very good week. And in fact, my winner of the week was kind of hard to find, but actually was Pfizer. Was the winner of the week. It was up just over 2.66%, which is a good gain, but actually overall was barely up on this pie because Johnson & Johnson was almost down 5%. But actually my losers of the week, I kind of picked 3 of them to point out. One of them was Bank of America. Bank of America really got hit hard. They kind of missed on part of their earnings call. So there's a big sell-off. It's 7.63% of their share price over the last 7 days, which is not very good, but I'm still going to hold on to Bank of America for the foreseeable future, and actually I plan on adding some more in the not-so-distant future. Also among the losers was Realty income. Realty's down 7.23% for the week, and I'll actually talk a little bit more about them here in a second. And then the last loser of the week was actually, I believe, last week's winner, I think. There we go. Apple. Apple lost almost 7%, just over 6.25%, which was almost the entirety of their previous week's gains wiped out. But that's kind of not totally unexpected since they kind of had a big week the week prior. But anyway, so this week I actually kind of saw my first time really changing up the pie in my allocations. I bumped financials down from 15 to 12 and real estate from 8 to 7. I actually removed public storage from real estate because I never did buy any shares of public storage, and I'm just kind of going to focus on Realty income for the foreseeable future. So yeah, and I reallocated 2% up for communication, so it went from 10% to 12%, and then information technology also went from 10% to 12%. because those are kind of companies that I really want to focus on, both for growth potential as well as dividend potential. So I'm kind of intrigued by what will happen there. But the big moves of the week actually came in my growth. I am selling off, or actually did sell off effective today, my shares of Delta Airlines. I kind of was hoping by now Delta and the rest of the airline industry would receive a bailout from Congress, but that has not happened yet. So I think airlines are going to be in for a long recovery, and that's just not something I really want to mess around right now. I was up over 30% on that position, so I thought that'd be a good spot to get out, but we'll see. I might eventually get back in airlines, but it won't be anytime soon. And so with that, I actually finally added these with the money I got from my sell of Delta. So I bought some Target, and I bought some Procter & Gamble, which are both down already, even though I just bought it today. I also got into Toronto Dominion, which I'd been wanting to for a long time. And then actually was a completely new addition that hadn't been here before, is I added Brookfield Renewable Partners, which is what it sounds like. It's renewable energy, which I think is a company of the future, as more and more of the world kind of angles towards renewable energies and green energy. So yeah, I think that's kind of one to keep an eye on for long term. I mean, I only have 5% of my growth pie allocated to it, and I bumped industrials down from 10 to 5 as well, since industrials just has Uber. So yeah, that's kind of what is new in the growth pie. I also made a single deposit this week into my dividends pie. I bought, let's see, here's everything here. So I actually deposited $125 and bought AT&T, picked up 4.5 more shares of AT&T because it's really been beaten and battered over the last month. I think it's around $27 a share. So kind of got some dollar cost averaging with AT&T, trying to lower my costs and pick up a few more shares on what I think is pennies on the dollar. So with my sell of Delta Airlines, I picked up $314 and then reinvested it into Procter & Gamble, Target, and Brookfield and Toronto Dominion. So yep, with that, kind of expanded my holdings a little bit, added 4 new holdings, and then 4 more shares of AT&T. Now, as far as my bi-weekly deposit, it's actually still in my cash balance, $139.85. Some of that is from dividends. I got 2 of them this week, one from Realty Income, one from Pembina Pipeline. So what I think I'm going to do with this, starting tomorrow, because today was a down day, so expect tomorrow might be another down day. I can't say for sure, obviously. I'm going to invest all of this into buying more Realty Income. So with almost $40, I think that should buy me a little over 2 shares of Realty, I believe. Check the share price. Yeah, so $58.75. So yeah, I'll get a little over 2 shares, which will be good because Realty Income, I mean, everyone knows them as the monthly paying dividend stock. So every time I buy it, I'll add a little bit more monthly income, and their yield's very strong at 4.5%. So excited about that. And that'll be my purchases of the week. Of course, next week will be my Roth IRA week. So yeah, I think I'll show you my updated Excel spreadsheet, what's going on there. So in my calculator, see what I've done this week. Between my deposits as well as my sale of Delta Airlines, it was $502.74 I invested. Came out to over 4.5 shares of AT&T, and then 1.5 shares of Toronto Dominion, and these were 0.6 of a share. Also included in this was my Roth IRA stuff from last week, because if you remember, I didn't get to show what was bought because of last week being Columbus Day, and that doesn't go through on M1 on federal holidays, which is fine. So yeah, all told, I got back $19.88 in annual dividends added, which is very strong, very happy about that. And then that yielded out to almost 4%, which I'm also very happy about that as well. So yeah, I'll be making $20 more next year, or projected to make $20 more next year than I was the week prior. So that's all good. So with this week's activity, it brings my annual total in the long term to 567.80, 3508 in the Roth IRA, and then 604.64 total. So, yep. As far as the future, I think Acorns is on its way out. I'll probably try to do that maybe in the next week or so, and I'll talk more about what I'm going to do with that in the future, because at this point I haven't really decided. So I think, as long as I'm not forgetting anything, I think that'll really take care of this week's recap. Well, I guess one more thing. I think actually, because Bank of America did have such a poor week, I might put it into Bank of America, but I also might put it into Apple. I don't know. We'll see. I expect that'll happen this week, liquidating my Acorns account, and then I might just put it in Apple, to be honest. Apple had a bad week as well, and with what I have in Acorns, I could actually buy a full share of Apple, and at this price, I think that's pretty fair price for a share of Apple at this point. So yeah, I think now will actually be the end of this recap. So I'll take you into the last part of the video. I just want to make my last few comments for the video. As always, please follow the link in the description to join M1 Finance. When you do so, when you both sign up and deposit $100 into your investment account, or if you're opening a Roth IRA, the minimum is $500. But either way, if you do that, M1 will actually give you $10 for doing so, and they will actually also give me $10 if you use my link. So that doing that would be greatly appreciated. Kind of get you guys foot in the water, kind of getting started, which I think is the hardest part of investing. Also, still Instagram, Twitter, follow those at bpruitt_YT, as I mentioned earlier. And then I guess the viewer question of the week is, what sector or sectors are you guys trying to buy right now or looking to buy in the future? I think pretty well my answer to that would be, with most people, information technology is a huge sector on Wall Street and will continue to be for the foreseeable future. So that would probably be my number one answer. Companies like Microsoft, Apple, IBM, stuff like that is definitely things I'll be looking to scoop up more of. And then part two of that would kind of be communications. Companies like AT&T, really, and then kind of Verizon have been really hit hard this year, and I think there's some growth potential there still left, as well as really strong dividend potential, which is what I kind of discussed earlier. I think with the new wave of 5G technology, I think we'll really see some big developments there, as well as AT&T's venture into the streaming market, I think will be productive for them. But yeah, I would say my answer would be information technology, which I think is probably a blanket answer for most people, as well as communications right now, at least telecommunications. But yeah, feel free to drop your response down in the comments, as well as anything else you want to comment on, thoughts and opinions on the market or my videos or me, whatever you feel like, just drop it down there. So yeah, I think that'll wrap it up for this video, and I look forward to catching you in the next one. Thanks, guys.